And welcome. This is Mary Ellen McGonagle here with your Friday afternoon MEM Edge show. As always, the show where we bring you where the action is in the broader markets, and certainly an action-filled week last week. I would dare to call it pivotal. We're going to take a look at what took shape as far as rather rapid sector rotation. Now, those of you that followed my show last week, you will have been alerted to what took place this week as a possibility. We'll get into that. And also, we will get into where the broader markets closed and what to be on the lookout for next week. So let's go ahead and start with those headline news that drove the markets last week. And front and center, it was inflation data. We did get CPI data and earlier in the week, and it fell for the first time since COVID, and that would be May 2020. Today, we did get producer price index, an even more impactful inflation number, and that data came in below estimates. So lots by way of response to those data points. We'll get into that. And then also next week, Fed Chair Powell will be speaking on Monday. June retail sales will be released. Housing data will be released next week. And then the Republic National Convention is expected to get investors' attention as well. So let's go ahead and take a look at those broader markets and see where we close for the week. And here we are, a daily price chart of the S&P 500. And in fact, we did not close at a new high. I did do this chart a little bit earlier in the day, but we had a sell-off into the close, and I will share with you how that shaped up today. Also, most impactful was a pullback in the Nasdaq. It was down about 1% into the close. So we'll get into all of that. But more to the point today is the fact that this is a chart from my last Sunday report. And I highlighted when the last time the RSI was up above 80. It's a very unusual time when that takes place. It's not a common occurrence. It did take place last Friday. And using that as precedence, back here in the end of December, we had about a 1.5% pullback on the markets before that uptrend resumed, a bit more of a pullback, and then the uptrend. So we did get that pullback very much sharply in place on Thursday. We'll talk about that. But it did allow that RSI to dip down into a more manageable level. Net, the uptrend in the markets remains in place. Now, from here, we would be remiss to not take a look at the equal weighted S&P 500. The broader S&P was up a little more than 0.5%, but the equal weighted S&P 500 up over 3%. And that is truly emblematic of what took place in the broader markets, broadening out. I will share with you where the strength was last week, and it is all about that inflation data that came in below estimates, and interest rates did decline. So let's go ahead and jump right in. Take a look at these 11 sectors that are underlying in the S&P 500 2-month daily price chart view, and I've added an RSI, a relative strength indicator, sorted these sectors in order of relative strength, and take a look. This is what I shared with you last week as an area that will fare well in a declining interest rate environment, and that is REITs, XLRE, jumping, and you can see it was up 4.4%. It was the top performer for the week. I will share with you some names there that look very, very compelling. And then also taking a look as we move through these more relative outperformers, financials up here. And I did mention, I believe, that KRE and banking stocks would benefit. And in fact, they did. XLF outperformed. It was up 2% for the week. And I'll share with you other areas in the financials outside of those banks. Nice uptrend taking place. We did get reports of earnings, and not all banks came in with great numbers, but those that did are faring quite well. And then also, as we move through, taking a look at some other areas that are newer, XLU up almost 4%. This is along the lines of that concept that I talked about as far as in a declining interest rate environment, investors will be drawn to those areas that have higher yields. Now, also, there are other drivers into the utility space, a lot of AI related names due to the need for electricity. But with XLU, I like the fact that that MACD just now dipping into positive territory coupled with that positive RSI. And taking a look at some of these other areas, industrials up here at the forefront, up almost 2.5%. And that is certainly outperformance. It is an area that is anticipated to potentially continue to outperform. And we can see this nice uptick in the volume as industrials regained their uptrend on Thursday. This is that move into value stocks, which we will get more into as we move through today. Growth stocks relative to value did underperform, and that's going to be critical to know as we move into next week. Let's take a look at some of these and beyond, of course. Let's take a look at some of these other sectors up here at the forefront, and you will see healthcare XLV. I'll share with you in the next segment one of the big outperformers in this area, and you can see we're at a new high with that healthcare sector. And we need to take also a look at these underperformers down here in this lower quartile and take a look. XLC pulling back from a new high. Meta Platforms is one of the main reasons, and we'll take a look at that stock and why Meta is pulling back. You'll want to know that because these mega cap names are due to report their earnings over the next 2 weeks. So let's go ahead from here and take a look at these sub-industry groups. And this is taking a look beneath the surface of those sectors. And I talked about healthcare. Take a look. IBB up here at the forefront. And this is biotech stocks up 6.6%. And this is very good news because it really indicates investor confidence when they're going into these biotech names. Many of them do not have earnings. They are very much speculative in nature. And then also up here at the forefront, another area that outperformed last week, IWM up over 6%. This is an area that really benefits from a declining interest rate environment. Small cap stocks on fire. Also of note is the fact that bank stocks are comprised. They are a pretty big percentage of the Russell 2000. We can see this gap up on Thursday, followed by a continuation rally into Friday. But again, there's that sell-off that we saw into today's close. Small caps just entering into positive territory with that MACD. And then other areas here that you'll want to be aware of, and that is XRT. This is that retail ETF, the S&P 500, on the move higher, 4.9%. Couple of reasons here. There is thinking that as rates come down, consumers will be more inclined to potentially use credit cards and otherwise engage in more by way of spending. Here we are with that MACD just getting into positive territory with the retails. Not all retail names are faring well, but there certainly is a lot by way of names that are beaten down that have earnings that are looking really quite interesting. Certainly one of the biggest movers last week was Homebuilders. This is XHB. Take a look at that gap up and continuation rally. This is the S&P Homebuilders ETF up almost 11%. MACD here also getting into positive territory. And quite naturally, this is an area with interest rates declining, anticipation that there will be more by way of home builder growth due to that declining mortgage rate environment. And also taking a look at some of these other areas. Software names, they did falter. And this is all about that AI and the move into AI stocks. We may see a continuation as far as moving into more of these value plays and away from some of these bigger growth names that are AI related, but most importantly with IGV is the fact that I will share with you a name that really pulled back last week, and it was all about an analyst downgrade on Monday. This is ServiceNow, a leading software name, but you can see this sharp pullback. And the reason for that Wall Street downgrade is because this Wall Street firm's channel checks are showing that ServiceNow will not benefit from AI-related sales until 2025. So what we saw in response to that is a number of AI-related software names pull back very sharply, Adobe among them, CRM also pulling back, Datadog, any number of names. So going to be keeping a close eye on that. Those software stocks were down over 1.5%. And taking a look at some of these other industry groups as far as keying in on rotation, I did mention that yields did drop, and this is what we want to see. We're now down at 4.18 on the yield for that 10-year treasury, and that is of course good news. Certainly good news for growth stocks overall generally, but also very good for these other areas that we've been talking about, such as housing, builders, and mortgage related type names, REIT stocks, and elsewhere. So looking through these other areas, we did get a very sharp pullback on Thursday with the semiconductors among other growth areas. Let's take a quick look at XLK because it was an underperformer last week, and you can see a very sharp Thursday pullback. This was when that move into those value stocks first started to gain traction, and then also the move away from Magnificent Seven stocks. And there's many reasons for that. A lot of the moves into these mega cap Magnificent Seven names is because they're viewed as a safe haven. They were, the leadership in the markets was very narrow and money was funneling into that area. Now, I did share with you that equal weighted S&P 500, and we are definitely seeing a movement into these other areas. And really, this is what we want to see. Broadening out of the market helps lifts all boats, and that does point more likely to the possibility of a continuation rally as we see more groups participate. From here, let's go ahead and take a look with the S&P 500. This is something I shared with you last week, and I'm doing it again today with that S&P 500 and looking at the names in this group sorted by relative strength in descending order. And the reason I'm doing this again is because there are new names up here at that leadership forefront. For those of you that haven't taken a quick look at last week's show, I did spend some time on this and talked about the concept that there were areas of the market outside of the Magnificent Seven that were on the move higher, but that movement has really broadened out even more this week. So we can take a look at some of these names up here at the forefront. ICE, this is a brokerage, Intercontinental, and we are seeing a number of these brokerage firms really gain quite a bit of upside momentum, thinking that there is going to be more by way of trading activity, more money leaving the sidelines coming into the markets. Also, I did mention the decline in interest rates, and one area that really benefited were auto stocks, and Ford is now up here at the forefront after a huge week, up another 4% today, executing a base breakout, heavy volume, and the momentum pointing to potential possible further upside. I'm not going to go through each name here, but I certainly did want to share with you how you can use this view to your benefit as far as if you stay on top of it and really just scroll through this first area up here and look at the first 16 names perhaps. And this is that move into REIT stocks. PLD is Prologis, and it is a REIT name that is now above each of its moving averages, nice heavy volume, and the stock is certainly trending higher, but also highlighting the fact that we are seeing moves into these autos and brokerage firms, also REIT stocks as well. Another REIT stock is KIM, and you can see this nice gap up, another gap up. Pretty heavy volume here as the stock. Now it is certainly extended. There really is no market condition where chasing is going to benefit you, but more for informational purposes as far as what is leading the markets now relative to just a week ago, really. And as we move through, I talked about utility stocks. AWK is a water-related name, gap up, gap up. And again, just a quick brief look here, you can see that. The other move, of course, is the fact that as last week, when I got about halfway down these 500 names, many of them were below key moving averages, but this week they're on the move higher. You can see moving above their 50-day simple moving averages, entering into uptrends. That would certainly be the case for many of these financial related. This is a REIT stock, SBAC. And then last up, I will share with you those names that are not participating. Just to keep you tuned in, we're going to go down to this very bottom quartile here because there are names that are certainly relevant. I talked about Meta, and let's take a look. The stock had a significant move lower today, down 2.7%. And really, it was all about analyst downgrade. And this is not what you want going into earnings. And the concerns had everything to do with digital ad sales. Pretty heavy volume on that selling. So keeping an eye on Meta platforms. And then, of course, as we move lower, there are a couple of areas I talked about. Not all areas of retail are participating. So I'm going to take us down and share with you some of those names that really underperformed last week. Airline stocks, UAL, Delta came out with their earnings this week. Not good. Nike still down in the dumpsters, and AAL also another area that is on the move lower. And then some of these restaurant related stock, Chipotle, CMG, and this is a classic example last week. If you didn't see that show, I also shared with you the sell signals, classic sell signals. We covered GWW, but let's take a look on CMG because this is a name that was on my MEM Edge report. But once we got this distribution day, very heavy volume, you can see that MACD crossover and that move below that 50-day simple moving average coupled with a negative RSI. That was the clear-cut exit symbol. So from here, let's go ahead and take a look very quickly at the S&P 600. I talked about small caps, the Russell 2000 faring very, very well. This is a view that you can access very easily. You can really request any index of your choice and also sectors. So from here with the S&P 600, this is going to get us in front of those small cap names. And I did really sort this by that 1 week performance. And then from here, take a look at these industry groups. You can see renewable energy. This is an area that fares well in a declining rate environment because individuals can afford that renewable energy as interest rates decline. And then, of course, we can see some of these REIT stocks up here at the forefront and talking about small cap and the move into these housing names. Let's take a look at Green Brick, GRBK. And here's that gap up into a base breakout and then a continuation rally. We can see that MACD black line up through the red. Nice high volume here. And this particular company is definitely a small cap name. It is about 2.8 billion, I believe. But again, another way for you to very quickly get your arms around where that movement was. And we did talk, here's another LGIH, Homebuilder, biotechnology. And from here, you can draw your eye to this far right. Take a look at that scooter rating. Those higher ratings are going to point you toward those stocks that are more technically sound. And taking a look at the Nasdaq 100. Now, this is an area that, as mentioned, it did falter into the close. So it was, 2 days ago, it was 2.8 billion. 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 It was 2 faring a bit better than the S&P 500, but we did see selling into the close. I talked about sharing with you some of the more vibrant biotech names, and here we are with Amgen, a nice move higher into a confirmed uptrend here. Now, we are certainly in an overbought position with that RSI, but this MACD black line up through the red is still in a very low range. So I would certainly keep an eye on Amgen as it is poised to potentially trade a bit higher. And REGN was another name I wanted to highlight in that biotech space, really having outsized returns as we move through and take a look with this Nasdaq 100. I do have that RSI up there at the forefront, and it is sorted by strength to weakness. And from here, again, you can very quickly get your arms around those names that are up here at the forefront relative to their peers. And I did want to share with you as well a name in the industrial industry group. I talked about that being an area that could potentially benefit from this declining rate environment. And this is 3M. What I did want to point out to you is the fact on this daily chart that we did get very close to this 2-month base breakout. I'm on the lookout for that black line up through the red. We can see that RSI in positive territory. And the fact that the stock has historical precedent as capability of outperforming the broader markets, that is constructive for that stock. And one other area, and I did want to share with you, is a quick view of the financial ETF. Now, bank stocks, I mentioned they fared really quite well, up over 8% KRE. But if you take a look at the overall sector and the performance for that last week, you'll see that asset managers up here at the forefront, and I want to make sure I have that sorted properly. And from here, taking a look at some of these other mortgage-related names, one name that is mortgage-related and small cap that I wanted to share with you is LendingTree. TREE is the ticker symbol, and take a look. A lengthy pullback over the last 2 months, and then this week, the stock has regained its 50-day simple moving average, potentially forming the right side of this base. MACD just getting into positive territory with that positive RSI. And I will leave it there. Everyone have a fantastic weekend. I'll look for you here again next Friday.